please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
So there you have it, important clarifications there coming in from the UIDAI chief, saying that biometric information, that there has been no breach of that information is still safe, and maintaining that Aadhaar number per se, is, and one should not be concerned if their Aadhaar number is out there, because that is not secret in any way. But the question, of course, is once you have that Aadhaar number, you have access to emails, you have access to postal address. Those are some of the concerns and questions that the Tribune report has raised. Meanwhile, the other big headline that we are tracking, India today took a giant step forward in its endeavor to clean up the banking system that is riddled with bad loans. The parliament has given the government its approval to send an additional 80,000 crore rupees towards issue of government securities, popularly known as the recap bonds. This was the third branch of supplementary demands for the grants for the financial year 18 that the Lok Sabha. The government, however, mentioned that the additional expenditure will not have an impact on India's fiscal deficit. Remember, the government had announced in its mega bank recap plan worth 2.11 lakh crore rupees that it was announced in October last year. Out of this, about 1.35 lakh crore rupees will come from recap bonds, and the rest will be taken and will come in from markets and additional budgetary support. Meanwhile, speaking in Lok Sabha earlier today, Finance Minister Arun Jaitley said that the government is ready with a plan for the quantum of capital each lender will receive. Take a look.
You issue an equity at a time where you get the best price, and therefore you get the best price when you are in good health yourself, and therefore it's only prudent that we improve the health, and then each bank decides at the appropriate time as to what is the best time that it can issue its own equity, additional equity, so that they are able to raise the price from that equity itself. Once this money is introduced, 80,000, I can tell you that the Department of Financial Services already has a detailed plan which is ready with regard to which are the banks to be selected with regard to which this capital adequacy is to be added. Norms with regard to their professional functioning. There will be a series of reforms which are going to be announced at that stage.
Okay, so what does this mean for public sector banks? To put everything into perspective for us, Lata Venkatesh is here with her analysis. Lata, this certainly is a ray of hope for public sector banks, but what's the way forward? How exactly will these banks be designed and broken up?
First, who benefits would be the question that equity investors will worry about. So we would expect that the allocation will be to those who are the maximum distance away from the minimum required capital, tier 1 capital of 9%. RBI wants banks to have 9%, and these are the banks: Central Bank, UCO, IOB, OBC Corporation, and more will come up for you, United Union, Andhra Bank. They are the maximum away from 9%. So you must expect that first the minimum capital will be given to them in the form of bonds, so that they are back in business as normal. The other criteria by which banks would get capital will be those who have the maximum problems. So the maximum gross NPAs, the more the gross NPAs, the more likely that they will get the capital. So that's IDBI. We have listed all those banks which have over 15% gross NPAs, and that's the list. It's a large overlap between this one and those who have tier 1 capital under 9%. So that's where the first money will go, and then it will depend on performance. So that's why you saw these kinds of banks shares rising today. The next question really is how will it be given? Will there be any cash at all, or is it all a book entry? Most likely it will be a book entry. 80,000 crore goes from the banks to the government. In exchange, the bonds come. Once the bonds come, the government has money. With that money, it buys shares, and it transfers the money back to the banks, and it will get shares in exchange. So it will, in all probability, be just an electronic book entry. And then the question that you raised, how is it that these bonds are going to be structured? Now, first, the bonds are, and that's a story break from CNBC TV18, that it will be non-SLR and non-tradable. Non-SLR is important because if these get SLR status, then banks will not apply to the current Government of India securities to fulfill their SLR requirements, in which case the bond prices will crash and yields will go up. So it was always expected it will be non-SLR. Not tradable also immediately is good from a government point of view and a bank's point of view, because if they start trading, then again there'll be a surfeit of bonds, bond prices will fall, yields will rise. You don't want that. What interest rate will they fix? What bankers would like is that the interest rate should be a floating rate. It should be whatever is the 364-day T-bill rate. Now, why would they want it? So that, you know, if it is a fixed coupon, then there can be a mark-to-market loss if yields rise or fall. And finally, what will be the tenor? They could be either callable bonds, that is, whenever the government has money, it will redeem them, or it will redeem them, you know, in tranches. They would be 5-year, 7-year, 8-year, 10-year. This is what the bond market wants, or the banks want. We will have to see. This is the next thing to watch.
All right, Lata, many thanks for telling us what could be what form this bank recap plan may take. On to the other big story this evening, the Parliament panel on transport, tourism and culture, they have recommended that airline companies should cap their fares. That's not all. The panel has also recommended that the airlines pass on the benefits from a reduction in the jet fuel tax. That should be passed on to the end customers. Rituparna Bhuyan, who first spotted that, joins in with the details. Ritu, tell us what this would mean. Clearly, the airlines would not be happy. Take us through the fine print, some of the key proposals, recommendations the panel has made.
Some scathing remarks made by this panel. For example, it has said that a regulatory environment does not mean unlimited freedom of exploitation. Windfall profits cannot be taken from hapless passengers, especially those traveling to Gulf. And hence, the panel has said that, you know, as far as issues like cancellation fees, airlines should be banned from charging more than 50% of the base fare. There should be a cap on all sectors as far as airfare is concerned. Also, some remarks made on some specific airlines, Indigo and Jet Airways. For example, on Indigo, the panel has said that passengers face difficulty in the check-in counters and in accessing food and water. For Jet Airways, the panel has said that the committee also noted through personal anecdotes of committee members the deliberate reluctance of Jet Airways to note customer complaints. However, I have a caveat, and that is that the recommendations of this panel are not mandatory. It's up to the Aviation Ministry on what to do with these recommendations, which were placed on the table of the House today by the panel.
Now, yes, these are just recommendations, and we'll have to wait and watch out to see if these are actually taken up and made into a norm. Now, let's get to some more action from the Parliament. Over the last 3.5 years, we have stuck to fiscal prudence and have successfully brought down India's fiscal deficit to sustainable level. Now, that's the word coming in from Finance Minister Arun Jaitley. Speaking in the Rajya Sabha today, the Finance Minister also said that these days, when the opposition talks of marginal fiscal slippage, it forgets the large deviations during the UPA rule.
आपने चिंता व्यक्त की कि क्या फिस्कल डेफिसिट में स्लिपेज हो सकता है। आज तो केवल मार्जिनल स्लिपेज की टिप्पणी आती है। उस वक्त तो बहुत बड़ा स्लिपेज हुआ था, 6% के करीब आपका फिस्कल डेफिसिट पहुंच रहा था। और इसलिए आप ये ना भूलिए कि पिछले 3.5 सालों में 4 सालों में उस 4.6% फिस्कल डेफिसिट को धीरे धीरे नीचे लाना और उसको एक प्रकार से उस ग्लाइड पाथ के ऊपर ले आना, ये कंसिस्टेंटली पिछले 3 वर्षों में हम लोगों ने किया है।
Well, meanwhile, on to all the market action of the day. After 2 days of flat end, markets broke the deadlock and saw broad-based gains across all sectors. The Nifty gained 0.3% and managed to end 4 points above the 10,500 mark. Meanwhile, the Sensex closed about 0.5% in the green, and it is at a kissing distance of to the levels of 34,000. The mid-caps, meanwhile, outperformed once again, ending at fresh record highs. The Bank Nifty also gained about 0.3%. Meanwhile, in the currency space, the rupee closed at a fresh 29-month high against the dollar. This was largely on the back of gains that were seen in the equity and the Asian currency market. The rupee closed 63.41 versus the dollar. Time for us to slip into our first break here on India Business Hour. But when we return, startups receive a flurry of tax notices seeking clarity on taxation in the union budget. A special discussion when we return. On to an exclusive story now. Electrosteel Steels, which has been put on the block by its lenders, has secured bid from some marquee names. Sources close to bankers telling CNBC TV18 that companies like Tata Steel, Edelweiss, Vedanta Group and the Dalmias of Renaissance are in the fray. In fact, sources also adding that the quality of the bidders indicates every possibility of the deal going through in the next 270 days. Lata Venkatesh, who broke that story, joins in with more. Lata.
Well, the 180 days is getting completed for the first 12 cases that were taken by the banks to the NCLT under RBI directive. You know, the law states that within 180 days, the asset has to be sold out or in some way restructured. They get an additional 90 days, so total of 270 days. But around January 11th, the clock stops the 180-day count. So what we understand is that for steels, a decent number of bids have come in. We understand about 6 bids have come, and there are 4 marquee bidders. Tata Steel is there, Edelweiss, the Vedanta Group, and the Dalmias of the Renaissance Group, the Orissa Cement guys. So it does look like at this steel company, which is not as large as the others like you know, Bhushan and SR, could probably be first off the block because there are some fairly wealthy buyers.
All right, Atta, thank you very much for those details. Time for us to slip into another break, but up next, Motown has ended 2017 on a high, but will the auto sector stay in the fast lane this year as well? A special report when we return.
Welcome back on to a special analysis. Motown has ended 2017 on a high. We are not saying it, the numbers are. Most automakers have shown a spike in sales in December, indicating that the economy seems to be coming back on track. CNBC TV18's Utkarsh Chaturvedi and Prashant Nair find out if it's too soon to pop the bubbly.
For the Indian auto sector, 2017 may have been full of speed bumps, roadblocks and diversions. But the light at the end of the tunnel definitely seems to have come closer as the year wound down. Sales data for December has shown a definite spike from levels seen a year ago. This is most remarkable in the sales figures for commercial vehicles and two-wheelers. The 3 market leaders in the CV segment have each recorded a 50% spike in sales, if not more, while in the two-wheeler space, sales growth has mostly stayed above 30%. Now, both these categories had taken a big hit from the demonetization exercise in 2016. But industry players like Ashok Leyland say the December 2017 numbers are more than just the base effect playing out.
The general economic activity in the country has been far, far better than what it was in the same period last year. So, you know, in states like UP, the demand is actually going through the roof.
This reading has sparked optimism that automakers may be in for a much smoother drive through 2018. Especially in the commercial vehicle space.
Makes a lot of sense for operators to move to the higher tonnage vehicles because of the total cost of operations. So I think it's a confluence of factors. I would still say that Q4 looks reasonably good.
The good news is that this spike in growth is not restricted to the commercial vehicle and two-wheeler space.